Our first guest this morning does not buy the idea of a BP bankruptcy. He says the company is far more valuable to President Obama alive than dead. Dan Pickering is the head of research at the energy-focused investment bank Tudor Pickering, and he joins us on the phone this morning. Dan, thanks for your time, and I want to start with some news that has developed over the last half hour. The Times of London reporting that BP will suspend its second quarter dividend. However, BP was quick to come out and say, no, we haven't made a decision yet. But explain to us, first of all, what a dividend suspension would be versus just canceling the dividend, and whether you buy it.
Sure. I think that what they're potentially talking about doing is, rather than permanently reducing the dividend, maybe not paying it this quarter, seeing how the spill liabilities develop, and then reinstituting the dividend quickly thereafter.
And we're talking about an amount here which would probably be something in the neighborhood of $2.5 billion. Your argument is this is a company that is much better served outside of bankruptcy than in, and there are plenty of people out there that say there's nowhere near, on financial terms, a scenario where we're in bankruptcy right now.
Yeah, I think what people forget is that these spill costs are mounting at $25 million a day, something like that. The more significant penalties, when they're assessed, and they will be, are going to come much further down the road. And so, barring a liquidity crisis of some sort, which it doesn't feel like there's going to be, this is just a manageable cash issue for BP at this point in time. So they're not going under because they run out of cash, because they've got a lot of cash and a lot of cash flow.
Dan, we've heard that argument from plenty of analysts on the street. I think a lot of investors are frustrated, though, that there are still a lot of upbeat analysts while this stock has been sliding. What do you make of that?
Well, we call it the fear vortex. We're in the fear vortex right now because we don't know exactly how much oil is spilling, when it will be capped, and the government rhetoric has been pretty high at this point. And so when you don't know how big fines are going to be and you don't know how much oil is being spilled, you're more afraid about what you don't know than what you do know. So I think that the investor reaction is more fear and emotion-based. I think that ultimately the penalties here are going to be more based on rational numbers.
All right, Dan, with that said, what about deals? What about other big oil players that might be looking at this situation and saying, maybe I can try and do a deal with BP? Do you think BP will be acquired?
I think it's a very tough deal to do at this point in time. Why? Because you just don't know what the liability is going to be, and do you want to be the company that swoops in, acquires BP, and then gets pulled down by massive liability? I think as the spill becomes clear, when the well is capped, when the government fine issue is more settled out, then there may be some potential, because the company's clearly going to be in a recovery mode for a period of time. We don't think anything gets done on BP for a long time.
All right. Thanks, Dan. Dan Pickering, co-president and head of research at Tudor Pickering.